Hello, everybody, and welcome to the AMPM Podcast. My name is Manny Coats, and I will be your host, and this is the show where we discuss all things Amazon private label and how to generate recurring revenue streams 24 hours per day during the AM and the PM, hence the name of the show. Get it? AMPM Podcast. As a matter of fact, I just got back, and I have all these little bug bites on my body, and I think they must have been from bed bugs or something from the hotel. Not sure, but if that's the case, while those little monsters were making lunch out of my body, I was making money. How cool is that? Pretty cool, I think. What's up, everybody? Manny Coats here, and I am here again with the famous Brad Mills. Brad, how you doing?
Excellent.
Great. So this is part 2 of our podcast. The first one went pretty long. We answered a lot of questions. I should say Brad answered a lot of questions. I was just here for the ride asking the questions. But we're taking a little, we're changing, we're diverting from the normal podcast. If you are just catching this one, normally we're talking about Amazon private label. And one of the things that I'm dabbling in now, guys, is cryptocurrency. So I wanted to do an episode, and it turned into 2 episodes here with Brad, on how you can take some of the earnings that you generate with Amazon and then move those into something pretty exciting. And I think this is one of those worlds, one of those new niches, I guess you could say, where it's kind of like if you could have invested in Amazon when it first came out and nobody knew what the heck it was, right? Or the internet, all those .coms back before anybody knew what a .com was. And hopefully it doesn't bubble explode like it did with the .coms. But that's what we're doing this episode and the previous episode 4, so that you guys can get informed. And we're going to have Brad come on a somewhat regular basis to keep us all up to date on things. So, Brad, that said, the first one was pretty awesome. You talked about what cryptocurrency is, what forking is, what all the different things are. But there's a lot of different questions here that I have that I want to kind of jump through pretty quickly, okay? Is that cool with you?
Yeah, just a quick comment, though, from earlier when we did the first podcast. It was earlier in the day in the AM portion of the AMPM podcast. Now we're in the PM portion. There's already been a development. Coinbase, one of the largest exchanges for Bitcoin and Ethereum, has commented on that SegWit 2X debacle, and they've sided on the side of Bitcoin. So they're going to keep the original chain as BTC, and SegWit 2X, if it forks, is going to have its own ticker name. So that's huge news for anybody that's on the no 2X side, or the original sort of like libertarian, idealist, philosophical side of Bitcoin, because big business didn't win in this case. Now, it's still going to be a battle, but this has just happened in the last couple of hours. So I feel a lot more safe about people holding their coins at Coinbase now that they're actually going to do the responsible thing and keep Bitcoin as BTC.
Okay. So for those of you that are wondering, in the first episode we did with Brad, he mentioned that he was going to be pulling, and he's already in the process of pulling his cryptocurrency, or Bitcoin specifically, offline, putting it in cold storage because of this fork that's coming up in November. What was it? November what?
It's going to be around the middle of November. There's no set date. It's a block number, so it depends on how many blocks, what time they get mined.
All right, so he was saying get it off because a lot of crazy stuff could happen. He was already doing it. Now you're saying if you're on Coinbase and you've got your coins, let's say in their vault, their BTC vault,
right? You
would leave it there? You're okay with that?
Now they've come on and commented on the SegWit 2X. Yes, I would say it's okay to leave it there on Coinbase, but as a good general security practice with cryptocurrency, if you don't own the Bitcoin unless you own the private keys, which means unless it's offline on a Trezor or in cold storage in a wallet, a hard wallet, or a software wallet where you only have the seed key and you control the private keys, it's not your Bitcoin.
Okay. All right.
And that was the big lesson I learned when I lost 90% of my cryptocurrency at Mt. Gox, when I had it stored on the exchange and it went under.
Yeah, 90%. Did you cry that night?
You know what? I felt I didn't feel too bad because it was all pixels. And that's the funny thing about this. It's just all pixels.
Yeah. But it was pixels that you paid for.
It was paid for pixels promptly.
How much was it worth? The 90% that you lost, what was the value of that at the time?
At the time, I think it was a few $100,000, something like that. So, I mean, it was a decent chunk.
What would that be worth today had you not lost all that and you still had them?
That today would be worth about $4 million, $5 million, something like that.
All right.
Yeah.
Maybe now you want to cry. Maybe now you want to cry.
Well, I always think my Bitcoins are worth what they're going to be in a few years. So at the time when I lost them, I was treating it as if, it was already a few million at least, because I believe that Bitcoin is going to go to like 25K, 100K in the next 3 to 5 years. So if I lost my Bitcoins now, it would be like as if I lost them in 5 years. That's the way I feel about it.
Yeah. Well, you know what? If you're right with your predictions, you guys on the first episode, he said, "Hey, I expect that Bitcoin." No, you were certain. I think you used the word certain that Bitcoin will hit $100,000 within the next 5 years, right?
I believe it will. Yeah. And that's why. So I sort of take this motto. Now this is the new shirt I'm wearing. Please stay calm.
Yeah, that's what you need to do in this industry.
That's what you got to do in cryptocurrency because it's very volatile. You could invest, and then the next day you're down 20%.
Okay, so
you just got to stay calm and hold. HODL, it's called.
It's called what? HODL?
HODL, yeah.
There you go.
HODL. You'll see that a lot in the crypto chats and Twitter and stuff.
What are some of the terminology terms? What are the terms people should be familiar with? Give us like 5 or 6 that people really need to know.
Well, if you're just investing in cryptocurrency, I mean, you're going to want to know the basics like blockchain, right? So a blockchain is just the technology that drives a lot of these cryptocurrencies. Bitcoin is the original blockchain, and then a lot of them forked away from Bitcoin to create Litecoin, et cetera, others that have their own blockchains. So you'll see a lot of people that are now using the buzzword blockchain technology expert or blockchain expert or whatever. And a lot of this is like businesses and people who are sort of marketers and stuff who are now trying to get into the space who don't really completely understand Bitcoin or don't want to align with Bitcoin, but they want to get exposure to the space. So you see blockchain everywhere. But just know that Bitcoin is the blockchain, it's the original blockchain, and all other cryptocurrencies that are based on a blockchain are based on Bitcoin, or at least the theory of the consensus mechanism that Satoshi Nakamoto came up with to make Bitcoin. Now, the other term is distributed ledger. So there's Ripple is a really big cryptocurrency right now, and that's a distributed ledger technology. The other one is a DAG. So a DAG is a directed acyclic graph. That's IOTA and GByte, which is Byteball. So there's these different consensus mechanism technologies that you'll hear the phrasing like, oh, this isn't blockchain, this is ledger, or this is a DAG or a Tangle. It's like, that's like the technology speak, but trading terminology, you'll hear a lot of things like drawdown or capitulation or just different terms for market cycles. So I'd recommend everyone that's listening to this, if you want to get a good book, go to Audible and get Reminiscences of a Stock Operator. It's a book about the turn of the century 1900s stock market. This guy, the name's slipping me, but it's this famous, early turn of the century stock trader about how he came up from trading small amounts of money in a bucket shop to becoming like a market maker on Wall Street. And it's full of terminology, and it actually is very reminiscent to what we're going through right now with blockchain and Bitcoin and cryptocurrencies. So that book, Reminiscences of a Stock Operator, it's a really entertaining listen, and it'll get you like up to speed on how to think about the current cycle that we're in, which is one of the greatest bull markets cycles of something that anybody can participate in history.
Brad, where is Bitcoin right now? What's the value? We're closest, is it around 6,000?
It's like 5,900, I believe.
5,900. When do you think it's going to correct? And people, because it keeps going up, people are waiting for it to drop again. And why would it drop?
Well, okay, so that's a good question. And like that's kind of what I've tried to do for my personal portfolio and for Alphabet is analyze the market, kind of see if we're going to enter some kind of exhaustive move that ends up just correcting and coming back down and cooling off. But if you look at a lot of the fundamental factors, I don't think there's going to be anything in the near term or like a serious correction back to like $1,000. I feel like there's enough momentum happening, and I've got people that analyze Coinbase signups and Bittrex signups and the exchanges signups. There's between 20,000 and 50,000 new users a day coming onto these exchanges. So like it's massive growth. Like there's enough demand from new people coming in to keep putting money into cryptocurrency, to keep like discovering it and allocating some of their savings and their net worth into crypto, that I don't think we're going to see anything short term, but you got to always be prepared. A
lot of people that I've talked to that really don't know that much about cryptocurrency are saying, well, what makes this opportunity real versus, a speculative market? How is there value in something like this?
Yeah, I mean, it for that question, you gotta kind of go back to the basics of like, what is money? When you ask somebody what is money, typically you're gonna get a response like either, oh well, it's a dollar backed by gold, or it's what the government tells me I have to pay my taxes in. And sometimes people just have never thought about that before. So half the people that think that the dollar is worth something is because it's backed by gold don't even realize that the United States went off the gold standard like decades ago, and that the dollar is backed by nothing. So when you think about it from that sort of philosophical point of view, I mean, really, there's nothing valuable about a dollar other than it's Jason Hartman likes to say it's backed by the intercontinental ballistic missiles. So, like, really, you got to think what gives value to things that have value. It's what people will give for it in return, right? So it's a sort of philosophical thing about like, well, I think it's worth this, so it is worth this when we're talking about free markets. And Bitcoin is a decentralized trust ledger. So it's the first time in history there's been a technology that allows you to store your value in something where you don't have to trust anyone else. You don't have to trust a bank. You don't have to trust a government. It's provable that you have what you tell me that you have, right? So that's a groundbreaking technology because there's never been something like that before. There's always had to be someone in the middle to say yes, right? And then with that comes regulation and control. So the same way that they can't shut down BitTorrent because it's decentralized and peer-to-peer, they're not going to be able to shut down Bitcoin. They've tried, and that's why it has value now, because it's gone through this sort of trials and tribulations of governments trying to ignore it and shut it down, and it's only used for dark markets and drugs, and we've gone beyond that, and now you're seeing a lot more institutional investors get on board. So when people ask like, what is it real? I mean, no, it's not. But neither are dollars. And really, like, what is gold valuable for? Sure, some people use it for like electronics and microchips, but there's really like, it's not like you're buying a gold brick to use. You're just storing your value in it.
But with a dollar, it doesn't go from $1 to being worth 20 cents overnight. And with Bitcoin, you've got these massive fluctuations sometimes. Like you said, it could go from 6,000 down to 1,000. At what point does it stabilize? I mean, is it just a certain number of people that need to be invested in this before it finally starts, you're seeing small increments every day?
So if anybody wants to follow a really good guy that talks about this, there's two guys I'd recommend. There's Willy Woo. He's at Woonomic on Twitter. And then there's Chris Bernisk, if that's the way his name is. Chris CB Insights is his Twitter handle. Okay. So these two guys are like smart economists. Sorry,
you got it.
That yeah, I did it. I need more coffee. That really dive into the data on this stuff. So Willie's got this chart that I like to show people, and it compares Bitcoin volatility to the volatility of other asset classes, and yeah, there's going to be a lot of fluctuation for a long time. And once we start to approach the M1 sort of money supply, where it's a like peer-to-peer money that is used just common every day, it's not going to be as volatile because there's going to be a lot more like weight and stability.
Now, when do you think that's going to be? How many years from now?
I think that's probably 5. That's what I'm thinking, like 5 years. In 5 years, when that happens, you'll get a really high price, but it'll be a stable price because it's going to be used for like not just store of value, but also like transactions, right?
Right. So I've got some questions. We're going to bang through these so that we can get. There's a lot of them here, so let's do this. This is from our Facebook group. Okay. We mentioned this in the last episode. If you guys want to join the Facebook group, you can do that by going to ampmpodcast.com/Bitcoin. All right, guys. So Marianne asks, what type of strategies are there when it comes to managing your account? Should we treat them like CDs, short-term investments, 401ks, long-term, penny stocks, doing day trading? What do you recommend? I think I know the answer to this.
Well, really, the answer there is whatever your specialty is. If you're familiar with trading, if you know how to short-term swing trade, if you're familiar with managing your own accounts, I'd say then you can apply those same strategies to the cryptocurrency markets. There's over 1,000 cryptocurrencies right now. So you can be a swing trader if you're coming from the Forex world or something like that. you can swing trade Bitcoin because it's very volatile, which means there's a lot to play with. So people who are used to that sort of thing, they can come in and swing trade. If you're like a more of a, I guess an entrepreneur, and you're focused on your business and growing your business, and you don't really have a lot of time to pay attention to these markets, you just want to plug into it and get some exposure, then you can like invest in, say, the GBTC on the stock market. It's actually the Grayscale Bitcoin Investment Trust. So you can get exposure to the Bitcoin gains without having to pay taxes on it when you take it out. So a couple of friends of mine had invested in GBTC last year, and they're up 10x on their Roth IRA account. So you can do that, or you can just buy and hold Bitcoin. Now, there's also, like, if you're used to investing in startups, if you're an angel investor or whatever, you can take the same approach, and then you can just fundamentally look and say, I like this because it's a privacy coin, or XMR or Monero. I'm going to invest 5% of my portfolio there. I would say another book, if anybody wants to kind of get a primer on this, if they want to get in and more do like that management style where they're taking more of an active approach, then Trend Following by Michael Covell is a really good primer on it, and The Complete Turtle Trader by Michael Covell. Those are two really good books that kind of will teach you some safe rules to start off with that'll make sure that you're not going all in on one coin, or somebody will be like right now there's this coin, if it's being promoted all over Facebook by affiliate marketers and network marketers. Ether, it's like they're trying to rip off the name Ethereum. I don't know if you've seen it. It's like, I can't, Ethereum or something like that. And like that can fool somebody into saying, oh, it's only a penny. I'm going to put all my Bitcoin in that because it's going to go 10x. And I mean, any books that will help you come up with some fundamental rules to sort of stick by until you're more familiar. Do not just go all in on random coins and ICOs, because you're going to end up losing your money like I did in the beginning when I was going all in on positions, and then
Gotcha.
It'll hurt.
Okay. Yeah. Perfect. All right. So if somebody wants to get into ICOs, they really don't know anything about the industry, and they want somebody that's like you that studies this thing and just really knows what they're doing and want to manage their entire account. They got 10 grand. They just want to have somebody else do it. Well, where do they go? Who do you recommend?
So right now, for somebody that wants to put a small amount in, there's not really a good option. And that's kind of what I wanted to create a year and a half ago when I decided I wanted to start algorithmic trading and stuff. And then that led me to actually just partnering with Alphabet and joining the Alphabet team and helping with that. But that's for accredited investors, like 100,000 minimum. So for a lot of like friends and family, I do just recommend buy and hold Bitcoin and forget about it and just make sure it's safe and you keep your keys. But like a couple of suggestions if you want to think about ICOs and follow the news or whatever. I mean, maybe we can start something, Manny. Maybe we can help people with some suggestions eventually. Maybe we can do this more often. But there's a couple of guys right now that are doing it. There's Carter Thomas and Ian Bellina. And if you just follow those guys on Twitter, like they're currently doing that right now, where they're always doing videos and like giving their thoughts on the latest and greatest ICOs. So if you want to start small, just find some influencers and follow them, and then maybe we'll continue doing this and give some more tips on specific like ICOs and rate them or something.
I would love to. All right, so Brad, Ben asks, and we kind of answered this one in the first episode. Says, I have £500. Should I choose Bitcoin, Ethereum, or something else? You said put it all in Bitcoin. So I don't think you've changed your mind in the last 4 hours.
Yeah, I'd say if you really don't want to like think too hard about it, just go to the top 10, even the top 5. Just split it up amongst those.
Who's the top? Okay, so you got Bitcoin, Ethereum, Litecoin. Who would be the other two?
Bitcoin Cash and Ripple and Monero. And I mean, Bitcoin Cash, I just posted about this earlier today. Like, I've been selling Bitcoin Cash this whole time. I held a little bit of it. That was the one that hard forked in August, and it was where the sort of like earlier, more emotional, more like less technically savvy Bitcoin people that wanted to push for the big blocks right away and couldn't get their way. They split off, and they've attracted a lot of like fundamentalist, like almost religious followers to Bitcoin Cash, and that is probably going to be worth something in the next year or two. Like, it's probably going to go to 1,000, 2,000 or something like that. It's only about 300 right now, but I'm not going to sell all my Bitcoin Cash. I'm going to keep some of my Bitcoin Cash, But Coinbase has 500,000 Bitcoin Cash right now, and they're at $300. So what is that? $300 million worth of Bitcoin Cash, or whatever, however many zeros that is. It's quite a lot that's going to be dumped on the market because most of the Bitcoin holders on Coinbase are going to sell their Bitcoin Cash when they finally get it unlocked from Coinbase. That's going to be a lot of sell pressure on the market, so the price is not going to go up. A lot of people think that it's like the Chinese government and the big miners, like the big Chinese miners, like Jihan Wu owns Bitmain. They're propping up the price of Bitcoin Cash, and they're the only ones mining Bitcoin Cash. Like, there's not a lot of natural miners on that blockchain to secure it. So that's true, and that's sort of speculation, but I can see it being true. So if you were them, right, and your mandate was to sort of replace Bitcoin with the Chinese Bitcoin, which is Bitcoin Cash, right, and you wanted to have this control over this cryptocurrency, are you going to support the price while these $300 million worth of it's going to get dumped on the market, or are you just going to wait for those people to get the Bitcoin Cash and dump it and let it go down to $100, and then you buy it all and then you pump it to 2,000? So that's the sort of theory you got to think about behind some of these things. I wouldn't be buying Bitcoin Cash at these levels because there's going to be a tsunami of sells once Coinbase opens it up, and then once all the sellers are out, you got all those people that hate Bitcoin Cash that are motivated to dump it. They're out of the market. Then you can buy some up, and then it'll be less of a risk of it going to zero. It'll probably go back up to here or higher.
What do you think it's going to drop to?
I mean, I was predicting $80 when it first came out.
300 to 80?
It came out at 800, and I predicted 80, and I was wrong with 80. I started selling around 800, but I mean, I sold a good chunk of it at 800. And then I bought a little bit more at 350 because I was like, maybe I made the wrong move here because the sentiment shifted around Bitcoin Cash. There wasn't as many people hating on it as there was before. So I bought a little more, but obviously I shouldn't have because it's continued to go down. But hey, such is life. That's trading.
When are all these coins going on the market you're talking about? A big dump. Everybody's dumping. When is that going to happen?
I think it's going to be first quarter 2018. I'd have to research that. Coinbase hasn't set a specific date yet, but they're the last holdouts, really. They hold the most amount of Bitcoin Cash for customers, and they're the last ones to put it available.
Why are they holding it?
Well, there's been some speculation that Coinbase actually didn't have the reserves that they said they had. So one way to prove your reserves for Bitcoin is when there's these chain splits, if you have 500,000 Bitcoin, if you say you have 500,000 Bitcoin, then you're also going to have 500,000 Bitcoin Cash for your customers. So if you can't give Bitcoin Cash, then some people think, well, that means you don't have 500,000 Bitcoin, right? Because it's a one-to-one split. So one of the theories is that Coinbase was sort of they weren't holding all the Bitcoins they claimed they were holding, and therefore they can't give all the Bitcoin Cash they need to give out. So what they're trying to do is delay giving it out so they can acquire enough of it on the market so that they can meet the reserves. Now, I don't know if that's true or not, but it would make sense, if Occam's razor suggests, right, like every other exchange has been able to provide their Bitcoin Cash to their clients. Well, why hasn't Coinbase? They say it's because of technical difficulties and whatever. Like they initially said that they weren't going to even bother giving their customers Bitcoin Cash because they didn't support it. But then enough people threatened to sue them that they said, okay, we're going to give it to you. It's just going to be a longer timeline while we figure it out. So I don't know. That's a good question, and I don't know the answer to that one. But giving you that answer kind of makes my earlier answer of saying, oh, it's okay to keep your money at Coinbase a little bit suspect. Because if they didn't have the Bitcoins to, maybe take some of your Bitcoins off there. Again, every exchange, I mean, I don't care who they are. I don't trust any exchange anymore.
Okay.
It's not your Bitcoin unless you control the private keys. If you're just buying to invest long term, take it off the exchange. It doesn't matter how trustworthy they are.
Let's talk about that. Taking it off. Okay. That's cold storage, right? You say take it off, put it into cold storage. People don't know what that means. Can you explain cold storage?
Well, actually, cold storage is even one step more secure than just taking it off the exchange and putting it on your own computer. So there's been a lot of zero-day exploits leaked this year. Just last week there was that Wi-Fi vulnerability found. There's constantly hacks and NSA zero-day exploits being dropped from on the black market where then like hackers will be able to use this to gain access to your computer or snoop on your traffic or whatever. So cold storage is a way of disconnecting your Bitcoin from the internet. So that's why it's called cold storage. Is you're taking the Bitcoin, the private keys, you're generating them on an offline computer that has never touched the internet. So you buy a brand new computer straight out of the box and use a wallet like Armory wallet, and you're actually like having a second sort of like layer of security by generating your wallet.
What's a wallet? What's a wallet?
Wallet is just that long string of numbers and letters that it represents your Bitcoin address. So that's the Bitcoin address, and the wallet is the actual file that your computer makes when you open up the program. So like Electrum is a Bitcoin wallet. Armory is a Bitcoin wallet. You can have SPV nodes, which are like mobile wallets, where it doesn't need to have the whole blockchain on it, because the blockchain's like 150 gigabytes now. You can't put that on a phone. You can put it on a computer, but if you want to be like extremely secure, you'll download a program that allows you to like generate a Bitcoin wallet offline, off the internet, air-gapped from it never touches the internet, and then send your Bitcoins from the exchange to that wallet, and that's called cold storage. So just in general, like if you don't want to get that secure about it, you can just go to trezor.io, Trezor, trezor.io, and get a hardware device. I don't have it here, but it's just like a little key. It kind of looks like this. And it's just a small little device that has like security built in, so you can plug it in to your computer, and even if your computer's infected with viruses and you're at an unsecure airport Wi-Fi or whatever, you can still transact on Bitcoin, and your like device is securing it from all that stuff. So that's probably the safest like mid-ground way for someone to protect their cryptocurrency wealth, is to use like a Trezor or a Ledger.
Are those the ones you have to actually press a button or something to make it work as well?
So it shows you on the screen, like sometimes what will happen with these malware is like you'll be sending it from your Coinbase account, say, to your wallet, right? And the script will actually like change the digits on your screen so that you think you're sending your Bitcoins to your wallet, but you're actually sending it somewhere else. So when you use these devices, it shows the screen. It shows the wallet address on the screen, and it makes sure you can just double check to make sure that you're not being like man-in-the-middle attacked. So it's just an extra layer of security, and they have some other neat features too. Like, you can set up other coins. You can store other coins on there, like Litecoin and Ethereum and stuff like that. So it's not just a Bitcoin wallet. They also let you store some of the altcoins too.
Okay, and I noticed that Coinbase said something about 98% or 99% of their customers do not store things online. They have it in cold storage, and they even say that it's like in security boxes or something. If you have this at your house on this key and your house burns down, are you screwed?
Well, if you didn't back up the private keys, then yes, you are screwed. But like, so for instance, what Coinbase is talking about is like they hold basically like a full reserve of all Bitcoins, and most, like 99% of their customers don't access their Bitcoins, and they don't require access to their Bitcoins because they're just holding it there as a vault. And they take that percentage of Bitcoins and they store it in cold storage. So have you ever heard the term run on the bank?
Yes.
When in Venezuela or like any country where the economy is doing bad and banks hold fractional reserves of the money, all banks do, right? So if you deposit $1 million at the bank account, they're allowed to then keep 10% fractionally in reserves and then issue the rest out in new loans and stuff. So 1 million turns into 10 million. And then, if all 10 people come to take out their $10 million, there's only 1 million in the bank. So nobody, that's when the banks have to shut down because it's a run on the bank. Like there's not enough money to back up the cash that's owed out. So with Bitcoin, you can verify that the exchange has that kind of money. So like Tether.io is you'll see USDT in some of the exchanges. So like Bitfinex, if you trade on Bitfinex or Bittrex, there's markets that trade with US dollars, like Bitcoin to dollars, but they're actually using USDT. And now that's a really interesting currency. So that's Bitcoin, that's cryptocurrency dollars. So cryptocurrency dollars are dollars that trade on a blockchain, and they're backed by dollars in a bank somewhere. So Tether, the company, has $420 million in bank accounts, right? And therefore there's $420 million or $1 million worth of USDT on the exchanges and floating. So you can verify that there's the full, that there's the amount of USDT available on the blockchain as they say they have in the banks, but you cannot verify that they have that in the bank, right? Because there's no blockchain for banks yet. That's what cryptocurrency is hopefully going to solve one day. So in the meantime, there's these USD tethers that you can trade like Bitcoins, but that actually represent $1 to $1. Now, with cryptocurrency exchanges, you can provably have a full reserve on the blockchain by verifying that you've got these coins in this address. So I don't know if Coinbase does that, but there are some exchanges that will provably, have the amount of Bitcoins that they say they have. And that way everything is all reconciled, and you know that there's no fancy like fractional reserve Bitcoin banking happening.
If I download everything to this key, this wallet, or what's it called? What's the device?
You can call it a hard wallet.
A hard wallet. Okay.
Yeah. The hardware wallet.
You would back it up somewhere else as well?
Yeah. So once you set up your Trezor, they're going to give you 24 words to write down on a piece of paper. And you can write that down and put it in a safe, or you can give it to your lawyer, or you can put it, with a bank at the safe or whatever. But as long as you even remember those 24 words, you don't need to have files or anything. Like you can have $100 million just in 24 words in your head with Bitcoin.
Now, where do you use those words?
When you're going to restore your wallet, you'll restore by entering those 24 words in sequence, and that will regenerate your wallet for you on the blockchain, because it's the private key to your public key. Your public key is your public wallet where people send you Bitcoin, right? Like that's the address that is generated when you want to receive Bitcoin, and then the private key is either the file or the 24-word seed phrase or password or whatever sort of like method you've used to back it up. You can input that back into the wallet, like either into the Trezor or Exodus wallet or any of these wallets, and then it'll restore your Bitcoins for you.
So since they're storing these 24 words online somewhere, doesn't that make it susceptible to being hacked?
No, it's not stored anywhere. It's just through the algorithms. So that's like the beauty of this encryption, the SHA-256 encryption algorithms and stuff, right? So like it's never stored anywhere. It's like if you forget your words, there's nobody that you can contact to get the words back, right? If you forget your password to your Bitcoin wallet, there's no one you can call to get the password.
Okay. So it's all encrypted. So it would just take it. At least today, it would be impossible to crack that encryption. Is that right?
Yeah. Right. Yeah.
Okay.
I mean, the fear is that like when quantum computing happens, that it'll crack the Bitcoin SHA-256 algorithm, and then everybody will be able to generate the private key to all the public keys, and then everybody, like the confidence will be lost, nobody will trust Bitcoin. But that algorithm, the SHA-256 algorithm, is what runs the entire internet basically. So like every bank account and like every internet service would all be screwed. So like Bitcoin is only 150 billion, 100 billion market cap thing right now. Like you imagine if like
everything,
all banks in the world suddenly got their algorithms broken, it would be a lot more to worry about.
So let's say somebody's buying Bitcoin, they're linking their bank account, they're doing everything. Do you recommend that they run some kind of malware checker or something on their system first?
There's so much to keep up with personal security and internet security and everything. Like, I don't even know if I'm doing it right. I don't know if you're not a security expert, then you're probably not doing it right. So that's why it's best to have like a Trezor, because you don't need to be a security expert. There's no way that they can like inject malware into your hardware device, right? Like they'd have to get access to your hardware device, open it up and install something like on the hardware. So you're pretty safe if you can get a Trezor and use it that way. Then you don't have to worry about having malware and everything.
So get everything into a hard wallet and then store that somewhere safe. Take that piece of paper that has your 24 words, either memorize it or put it into a safe somewhere,
Yeah, I mean,
So
I suggest just giving one to your lawyer if you have a lawyer, or if not, just get an account at a bank or bury it in the backyard. Like it doesn't really matter what you do with it, just as long as you back it up somewhere. It's even better, even though you shouldn't, it's even better to store it in a password manager or something than to not back it up and not write it down. Like you shouldn't put it in a password manager because then if someone compromised that manager or has access to your system, you're giving them the seed to your millions and millions of Bitcoin wealth. So don't do that, but it's better than not, doing it.
So let's say I get up to where I have, 100 Bitcoin, right? And it's now $10,000 a pop. Okay. So I've got, what is that? $1 million? $1 million.
$1 million bucks.
I'm a millionaire. So how much can I sell at a time? Let's say I'm like, oh man, I want to get rid of all this right now and cash out. Can you cash all of it out at once?
Yeah, the market is trading at this point like $4 billion, $5 billion in a 24-hour period. So to get rid of $1 million is easy.
Okay. You can't do that. Like on Coinbase, they have limits, right? Like you can only do X amount per week or something that?
If you're going to be selling a large chunk like that, then you'd want to go with an OTC broker, which is OTC stands for over the counter. And it's just a type of trading where you're not actually selling on the market, but you're using market prices and like an index of market prices to get a fair price between the ask and the bid. So the buy and the sell. So you'll use like there's a Circle is one of them and Cumberland Mining is another one. And these are like reputable, well-known Bitcoin OTC brokers. And you can just KYC with them. So it's, you gotta go through the KYC AML process. So you gotta verify. And
what's a KYC?
Know your customer. So it's like anti-money laundering laws. So in order for them to operate legally, they have to know their customer and they have to have like passport and, be able to report to the IRS if they ask, and just follow these sort of like anti-money laundering, like anti-terrorism laws that have kind of like are actually stifling a lot of money startups because it's very onerous to like, or onus or whatever the word is. It's like a very tough expense to have to sort of deal with. Like a lot of startups in fintech are spending like hundreds of thousands of dollars on compliance. So anyway, you can do it. It's just you gotta dox yourself.
Okay. How quickly, once the money hits Coinbase, let's say I'm using Coinbase and it's now deposited there, do you typically pull it and put it onto a hard wallet? Do you do it like right away?
No, so I'm trading a lot. Like I'm trading probably a few thousand times a month. Actually, the last 2 months I've been trading a lot less, maybe like 1 or 2 times a day, maybe 5 times a week. So before I was trading, when I was using the algorithms, I was trading more like 100, 200 times a day. So, but regardless, like I'm looking for liquidity and I'm going in and out of positions. So I'm actually keeping a lot of my coins on exchanges. Now, I have this like working capital, right, that I'm using to trade my portfolio with, and it's exposed to the counterparty risk of exchanges going down. So if you're not going to be trading like me, then I'd recommend taking it off. Like as soon as you buy it, just the next day or whatever, just take it off and put it on your wallet because you're not going to need it.
Okay. What are the, and well, let's kind of bang through these because there's about 5 or 6 more questions I want to get through.
Cool. Do it.
What are the top 3 wallets you'd recommend?
So Electrum is a good wallet for Mac and PC. Exodus is a beautiful wallet that has the ability to swap to other cryptocurrencies natively in the wallet. So you can put Bitcoin in your Exodus wallet. It looks beautiful. It's like if Apple built a Bitcoin wallet, then if you want to say buy some Litecoin or Ethereum or whatever, you can actually swap it straight in the wallet. You don't even have an exchange account. So Exodus is a really good one. And then Trezor itself is a wallet. So buy a Trezor for sure. And then if you want to have something on your phone, I would normally recommend Bread Wallet, but Bread Wallet sort of supports the 2x fork, so I don't really trust recommending them anymore until they come out against the 2x fork, because if you have your coins on Bread Wallet and then all of a sudden they're saying that your Bitcoins are SegWit 2x now, but SegWit 2x is only worth $50 a coin, you're going to be pretty pissed off when your $6,000 Bitcoin is now all of a sudden only worth $50 because they supported the SegWit 2x fork. So you got to be careful about the wallets that you use. I wouldn't use Bread Wallet. In fact, I probably wouldn't be using. I mean, Green Address is one, and Samurai Wallet is one. If you really want to have a Bitcoin wallet on your Google, phone or whatever, just Samurai Wallet's a good one. They support Bitcoin.
Ricky asks, what's the best cold storage wallets? What would be the top ones you recommend? Trezor, you said was been coming up multiple times?
Well, Trezor is not really a cold storage wallet. That's a hardware wallet. Armory is probably the best cold storage wallet. And then, I mean, you can use any wallet. You can use the bitcoin.org, just Bitcoin Core client for cold storage. Cold storage is more about the method of generating your keys offline.
What is going to be happening with Bitcoin 10 years from now?
Hopefully what's going to happen is that the Bitcoin blockchain is either going to be just integrated into our financial lives at a protocol level where you'll be at a bank account and you can have your money in dollars or Bitcoin, or it will be dollars on the Bitcoin blockchain and you just don't even realize it. So that's what I'm hoping, but it's too far out to predict. I mean, yeah, it's too far.
What are the current biggest risks to crypto right now, you think? I mean, hackers or using bad wallets or linking your bank account to a...
I feel like Bitcoin is just a big experiment. It's a social experiment to see if we can evolve the concept of money to something that works just same as the internet works, right? Like a decentralized, trustless money. To see if that actually worked, that would be revolutionary, right? It's 100 billion market cap right now. We could get to a few trillion market cap before we know if the experiment even worked. But we're going to have all these attacks along the way. And now Bitcoin keeps getting attacked. One of the biggest threats to Bitcoin could be a hostile government. So if a government really didn't want Bitcoin to succeed, they could 51% attack the network. And all they'd need to do is acquire 51% of the total hash power and attack the network with that. So what that means is there's miners that secure the Bitcoin network, right? And all blockchain networks. And these miners run specialized hardware that validate transactions and keep the blockchain secure and build blocks one on top of another to make sure that all the previous blocks have the same proper history, right? If you own 51% of that hash power, you can start building blocks faster than the rest of the network. And then you can start faking transactions and rearranging the previous transactions. And it just basically renders the whole thing meaningless because you can start double spending where you can send me 1 Bitcoin, I get the Bitcoin, but then you're so fast that you control 51% of the network that you can then also spend that and send it to someone else. So now 2 Bitcoins went to 2 different people, or 1 Bitcoin went to 2 different people. So that's the biggest threat, I think, is a hostile government or somebody that has a bad actor that acquires more than 51% of the Bitcoin network and decides to put all of that power towards breaking it. Now, it's a massive undertaking to do that because at this point, there's more computer power and processing power securing the Bitcoin network than there are computer programs or computer processors and processing power for all of Google. The Bitcoin network is the biggest, strongest processing network on the planet right now.
So what kind of country do you think has the ability to do this if they want to?
China. China could do it. The United States could do it. I mean, it's not going to be easy, and hopefully what we will see is a hash war where it's where we'll see a currency war, but the currency will be Bitcoin. Just like we're seeing a gold currency war right now and a fiat currency war with countries devaluing themselves against other currencies. We'll see that with Bitcoin where it becomes an arms race to get the most amount of Bitcoin hash power and get the most amount of Bitcoin reserves. So we're already starting to see this happen with Russia invested $100 million or is investing $100 million. They just announced last month into Bitcoin mining. Japan just announced with GMO that they're investing $100 million into mining. NVIDIA came out with a Bitcoin initiative where they're going to start investing more into Bitcoin mining hardware. And China, of course, already has that. They have more than 51%. They're the leader in Bitcoin chips right now. So they sell the chips, but it's not all controlled by the Chinese government or the Chinese companies. It's they're the leader in manufacturing Bitcoin chips, but they sell them all over the world. But now we're starting to see this arms race develop. So hopefully that the free market effect, free market economy sort of philosophy wins the day here, and it just becomes competition and it further decentralizes because more governments and countries want to get involved. The other thing is Sybil attacks and like what we're seeing with SegWit 2x. If the business community got together and were able to influence the direction of Bitcoin, to censor Bitcoin in some way, to control Bitcoin in some way, that would totally destroy this experiment of decentralized money that has no influencers and nobody that can control it. If some business guys are able to come together now with like their hundreds of millions in value and just say, well, we want Bitcoin to do this and this and this, and if they win, that's what SegWit 2x is. So that will basically mean that this whole experiment was kind of a failure. Sure, blockchain technology is going to be valuable and we'll probably still see it be worth more and more, but it would be very disappointing to see that some group can influence the direction of Bitcoin to take away that decentralization, which is what makes it so valuable.
You mentioned mining a few times. For those of the listeners that do not know what mining is, you used to mine back in the day. I remember you had a big setup. What is that? What does that mean?
So it's like with PayPal, right? There's money that works on the internet, and the only reason that works is because PayPal is the central sort of like arbiter of the transactions. So PayPal processes the transactions with their centralized servers, and they also can do refunds and chargebacks, and they have to sort of be the middle, the control of PayPal and the transactions. They process it all. eGold was another electronic currency back in the early 2000s where it was like a centralized electronic currency that was backed by gold. And that was really interesting. I used to use that as like a youngster, I guess in my late teens, early 20s or whatever. I just adopted that technology too, way before Bitcoin, because I liked it. It was interesting. It was like money on the internet. But what happened there was that it got so much transaction volume that what they did was they actually stored gold in a vault. So they backed gold. They backed the eGold by gold in a vault. So you could like trade these fractional electronic units of gold as currency. And it was centralized. So once it got to a certain transaction volume and it grew large enough, the FBI shut it down, arrested everybody, said they were using it for child porn and drugs and everything, and whatever they're going to try to do to like shut it off. And they did. They shut it down. So that's like, centralization is when a company controls the servers and controls the processes, right? Like Napster was shut down because Napster controlled the servers, right? With Bitcoin, Satoshi Nakamoto was able to come up with this consensus mechanism that has game theory where you have enough incentive to act as a server, to process transactions and earn Bitcoin for doing that you're not going to also like attack the network. So it's like this delicate balance between miners acting in their own economic interest to like earn money, and because they're actually spending power. Like it's very expensive to mine a Bitcoin. It costs about $1,000 in power to mine a Bitcoin right now.
So somebody who has this entire setup, they have all these crazy servers, and they were doing this, a year ago, and now you got Bitcoins that are worth 3 times as much. Are they making 3 times as much money as they were a year ago?
Yeah. So what happens is this cycle that always happens with Bitcoin. It's this profitability cycle. So Bitcoin price goes up, Bitcoin mining becomes really profitable, and then more Bitcoin miners come on the system and like join up and buy Bitcoin mining equipment to become miners, and then the difficulty goes higher. So the algorithm changes as more and more mining processing power comes on the network, and the cryptographic like equations get harder to solve. So it just keeps it's this competing process. And then if there's a major correction, well, then the Bitcoin price goes way down. It's no longer profitable for all these new guys that came in. So most of them will drop off, or they'll just continue mining until their hardware is not worth as much as it was, because the algorithm will change based on how many people are mining. So yeah, the people that were mining last year are like up 10x on the Bitcoins they mined last year because it's worth 10 times as much. And a lot of these miners are like, they're paying their bills, but they're also speculators. Like they're speculating that Bitcoin's going to be worth a lot more one day, and now it's paying off for them.
You mentioned several books, some people to follow on Twitter. You mentioned some guys that are social influencers to follow. Anybody else or any places, reputable sources that provide objective information about various kinds of cryptocurrency?
Coindesk.com has good information. I'd go to actually CNBC actually is running these fast money flips on YouTube where they've got different cryptocurrency investors. Those are really interesting. CNBC Africa has the Crypto Trader Show where they'll get different cryptocurrency investors on. That's a really good resource. And then coinmarketcap.com. That's kind of where you can follow everything. That's a really good resource as well. I would stay away from bitcoin.com because bitcoin.com, that's the one thing I would recommend. Like, just don't listen to what bitcoin.com says, because bitcoin.com thinks that they're Bitcoin, but it's really just Roger Ver's website for Bitcoin Cash. And he was just disappointed that he got depreciated from Bitcoin. So his conversation was censored, and I understand that. Yeah, he's a very emotional guy and one of the earliest investors in Bitcoin. Some people think he has like 300,000 Bitcoins. So like he's probably one of the wealthiest Bitcoin individuals there is, but he wasn't being listened to. And like the core developers and the community was sort of started to ostracize him because of his views on the size of like upgrading the block limit. Like he's not a developer, so the theory was like he shouldn't be so vocal about the code. This is a free open source project. It's like, one of the major shareholders of Google or something trying to control how the internet protocol solves latency issues. It's just like there's no correlation between how much money you have and like he was treating it more like a network marketing business. Like, I introduced you to Bitcoin. Why aren't you listening to me? You're my downline in my Bitcoin network. So don't listen to Bitcoin.com because they recently came out with this article saying that Bitcoin Cash is Bitcoin. And they're trying to rebrand Bitcoin Cash as BTC.
Tons and tons of ICOs, hundreds of them, it sounds like, so far. I think you said over 1,000 different types of coins. So money's coming in fast to fund all these. Do you think, and faster as the news starts covering all this stuff and people want to jump in so they don't miss the gold rush, do you think there could be a risk of a bubble here?
Mm-hmm. Well, it's probably going to do that, unfortunately. Do you
expect that to happen within the first 5 years or after the 5 years?
Yes, I do for sure. Yeah. So like you got to be fully aware that this could pop at any moment. But that's why I recommend people don't go all into cryptocurrencies like the next hot ICO or something. Like, I talk to some people. I say, hey, do you take Bitcoin? Like usually I just ask that question, or do you have Bitcoin? Majority of the people answer me like, what's Bitcoin? So.
Many people don't know what it is yet. Yeah.
People don't know what it is yet. Like, okay. Sure, we know what it is because we're like entrepreneurs and we're like plugged into the internet and internet marketing, and mm-hmm. we see ads that like advertisers are advertising towards us. So we're kind of like being retargeted online to show us ads about Facebook or about Bitcoin because that's what we're interested in. But like the average person right now doesn't really know what Bitcoin is, and they definitely don't know what Ethereum is. So if you ask somebody, hey, do you have Bitcoin? They'll probably say either like, oh, what's Bitcoin? Or like, oh, I heard of that. But if you ask someone like, do you have Ethereum? They're gonna look at you like you're crazy because Ethereum is. So that's one bubble indicator. So it's just a matter of like fundamentally researching and finding which ones you think are gonna be worth something here in 10 years. Is it going to be the ICO for the strip club in Vegas, or is it going to be the peer-to-peer money, right? Like you got to be careful what you put your money into and just follow proper risk management. That's what I'd suggest.
Yeah, don't put anything in that you're not willing to lose at this point because it's high rewards, high risk. So
yes, it definitely is.
Final question for you, Brad. I asked this of all the guests that come on. In your case, it's not as relevant because I have a feeling I know what you're going to say. But if you can go back in time, 5 years, okay, and you could talk to yourself, what would be the advice that you would give yourself?
5 years ago, I would say, 5 years ago, it's a tough one because 5 years ago, I was kind of starting on this journey of like confidence in myself as an entrepreneur. So I've had a lot of success in the past. I've been in the right time at the right place. I've like accomplished some dreams. Like I wanted to make a movie and I ended up going and making a movie and raised money from a Facebook thing to make a movie. And then I had Facebook games that were making multiple seven figures for me and a few other partners. And like all the whole time along this whole journey, I thought I wasn't good enough as an investor. I always needed a partner. I always needed somebody to like help me succeed. So it wasn't until I started following Tim Ferriss' podcast and started getting really into like gratitude and morning journaling and meditation and stuff that I was able to start to let go of some of that and start to believe more in myself as a solo entrepreneur individual, right? So I would have told myself back then to start, get the 5-minute journal and start just doing that and start meditating and then listen to, expose yourself to more philosophical books and stuff and just to sort of try to build up some confidence as an individual rather than thinking I'm going to be needing so much help all the time.
Yeah, that's a great answer. And also take all your money, invest it in Bitcoin, and hold it until 2017.
Don't sell your 1,000 Bitcoins when it gets too volatile.
Yeah,
that would have been better.
Take it offline. Don't leave it in this.
Yeah, don't leave it in Mount Gox, you dummy.
Perfect. So guys, this has been super awesome. I hope you guys have enjoyed. Brad, thank you so much for coming on the show. We're going to have you come on a regular basis. If people want to reach out to you, you're in our Facebook group now, the new one that we had set up, guys. I'm going to mention it again. You can get over to that Facebook group by going to ampmpodcast.com/Bitcoin. And then for those of you that are Amazon sellers, private label, that's why you typically listen to this podcast. I always want to mention that you guys head over to ampmpodcast.com/resources, and that's where you'll get all the resources we use to generate 7 figures every single year. All the tools and the tricks and techniques on how to rank stuff to number 1 and so forth. So, but I'm not going to talk about that too much because this is cryptocurrency, not Amazon. And but yeah, Brad, thank you so much. And we're going to have you come on maybe once or twice a month. If that's cool with you.
Yeah, sounds great.
All right, man. Well, we'll talk soon. Thank you.
Thanks, Manny.
Bye-bye. Make sure you slam the subscribe button. Give that video a thumbs up and share it. One final thing, if you want the most badassical Chrome extension for Amazon sellers, download the Helium 10 Chrome extension for free at helium10.com. The link is also in the description. What other topics would you like us to cover? Write them below in the comments.
You've been listening to the AMPM Podcast, hosted by Manny Coats. For more information, insider tools, and to get the resources mentioned in this episode, visit ampmpodcast.com.